Imagine waking up one day and realizing that a small decision you ignored 20 years ago could have completely changed your life today. Not a risky trade, not crypto hype, not luck, just a simple investment in a company you already knew and used every day. That company was Google. Back then, Google wasn't the unstoppable tech giant it is today. It was just a clean, fast search engine in a world full of uncertainty. And yet, if someone had invested a modest amount and done nothing else, no trading, no panic selling, no emotional decisions, they could easily be a millionaire today. This isn't a fantasy story. This is real market history, and understanding how it happened can completely change how you think about money. To understand why Google became such a powerful investment, we need to go back to the early 2000s. The internet was still young, and investors were traumatized by the dot-com crash. Many technology companies had failed, wiping out billions of dollars. People no longer trusted internet businesses. When Google announced its IPO in 2004, many investors were skeptical. At around $85 per share, people thought it was expensive. They believed search engines were easy to copy and that competition would destroy profits. Google had no YouTube empire, no Android dominance, no cloud services, no artificial intelligence leadership. It was just a company that helped people find information online faster than others. But what most people failed to see was Google's vision. Google wasn't just a website, it was building an ecosystem. Its advertising model was revolutionary. Businesses could reach customers exactly when they were searching for something. That single idea became one of the most powerful money printing machines in history. As revenue grew, Google reinvested aggressively. It didn't just sit on profits, it used them to acquire companies, build infrastructure, and dominate new markets. YouTube was bought when people thought online video was a joke. Android was developed and given away for free, eventually controlling most of the smartphone world. Every move added another layer to Google's dominance. Now let's talk numbers, because this is where reality becomes shocking. If someone invested just $1,000 in Google at its IPO and held through all the ups and downs, that investment would be worth hundreds of thousands of dollars today. Increase that initial amount to $5,000 or $10,000 and you enter seven-figure territory. And this didn't happen because of perfect timing. It happened because of patience. The investor didn't sell during crashes. They didn't panic during recessions. They didn't try to outsmart the market. They simply stayed invested while time did the work. This is the power of compounding, and it's one of the most misunderstood forces in finance. Compounding doesn't feel exciting in the early years. In fact, it feels slow and boring. But as years pass, growth accelerates. Profits generate more profits, and momentum builds silently. Google benefited massively from this effect. Every year it grew stronger, larger, and more influential. And as a shareholder, your money grew with it. Most people underestimate how powerful time really is. They focus on short-term gains and miss long-term wealth. But let's be honest, holding Google for 20 years was not easy. There were moments when the stock dropped sharply. During the 2008 financial crisis, markets collapsed and fear dominated headlines. In 2020, global markets crashed again during the pandemic. Each time, investors were convinced the world was ending. Many sold at the worst possible moment. Those who did locked in losses and regret. Those who stayed calm and trusted the business were rewarded beyond imagination. This is the difference between traders and investors. Traders react to price. Investors believe in value. And this brings us to a painful truth. Most people didn't lose money in Google because it was a bad investment. They lost money because they sold too early. They doubled or tripled their money and thought they were smart, but they missed generational wealth. Real wealth isn't built by winning one trade. It's built by holding a great company through uncertainty. Google didn't make people rich overnight. It made them rich slowly, and most people don't have the patience for that. Now the question everyone asks is, can this happen again? Is there another Google today? The answer is yes, but it won't be obvious. 20 years ago, Google didn't look like a guaranteed winner. It looked risky, boring, and uncertain. The next Google may be in artificial intelligence, renewable energy, healthcare, or infrastructure. It may be criticized, doubted, and ignored. By the time everyone agrees it's a great company, most of the money will already be made. That's how markets work. This story isn't meant to make you feel regret. It's meant to shift your mindset. You didn't miss your only chance, you missed one opportunity. Markets constantly create new ones, but only for those who think long-term, stay disciplined, and resist emotional decisions. Google teaches us that you don't need dozens of trades or perfect timing. You need patience, belief, and time. So the next time you feel tempted to chase quick profits or panic during market drops, remember this story. Remember what a simple investment in Google became. And ask yourself a better question, not how to get rich fast, but what company you could confidently hold for the next 10 or 20 years. If this video helped you think differently about investing, make sure to like it, subscribe to the channel, and comment below which company today you believe could be the next Google. Your future self may thank you for it.